Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds to 9 o'clock with news of some relief. The US didn't surprise with its inflation report. American CPI inflation for July was reported overnight at 5.4%, the same as for June. Components of their core inflation, that's without food and petrol, slipped slightly to 4.3% for the year to July, raising the prospect that it may have peaked. But analysts say a retracing lower from here may take a long time. The US federal budget deficit in July came in at $302 billion, almost exactly as expected. That makes the deficit for the prior 12 months $2.9 trillion, or 12.6% of GDP. In the equivalent 2020 year, it was 16.1% of GDP, so that's a credible progress over the past year. And China's new yuan loans in July have stunned analysts by coming in at a very weak level, confirming the overall China economic slowdown. The debt growth was 10% below analyst forecasts and a stunning 50% below the June level. And it is essentially the same as in July 2019. For a country powered by new debt, this is a worrying signal. Worse, China's July new vehicle sales came in at just under $2 million in its lowest July since 2015. Given that the 2020 was pandemic affected and 2021 basically isn't, this isn't a strong result. China is banking on exports to bolster its 2021 economic position as the local momentum seems to be fading there. However, its geographic neighbour and economic rival turned in some very good data overnight. Japan's iconic machine tool manufacturing industry is booming again and turned in a cracker month in July in terms of new orders. At 135 billion yen for the month, this is the highest since mid-2018 and is one-third higher than July 2019. Is a recovery that augurs well for Japan's industry and export sector. And Australian new home sales fell by 20% in July, with declines experienced in almost all major states. With lockdowns in multiple states restricting trade and eroding confidence, it is not surprising that fewer people were able to visit display homes. And the iron ore price is lower again today. It is now down 25% in just 4 weeks. This is a bear market now and probably has more to run because China is cutting steel making sharply. The US Treasury 10-year yield starts today at 1.34% and unchanged since yesterday. And the price of gold has recovered somewhat today. It rose $21 from this time yesterday to $1,753 an ounce on the no surprises US CPI data. Oil prices are up 50 cents a barrel from this time yesterday, so in the US they're now just on $69 a barrel, while the international Brent price is just over $71 a barrel. And the Kiwi dollar opens today at just under 70.6 US cents, at its highest level since late June. Against the Australian dollar, we're up to 95.6 Australian cents and its highest level this year. Against the euro, we're firm at 60 euro cents and a 4-month high. That means our trade-weighted index starts today at 73.7 and now near the top of its narrow range of between 72 and 74 we've been in for the past 10 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.